Salesforce? You want to talk about Salesforce? I wish I could give you more information about Salesforce. Welcome to another episode of Market Bias. Today, we have the big event, the Nvidia earnings, ladies and gents. Well, I should have gotten a sound effect for that.
I'm really rich.
But that's okay. Welcome to another episode of Market Bus. Hope you're having a wonderful day. Today, we have Nvidia earnings. Nvidia's looking quite sad today, and market is not expecting a big move on the name, which actually has me a little bit excited coming this time around. We will have to see. How you doing, Dragons? Welcome to another episode of Market Bus. Am I live? I think I'm live. I hope I'm live. I've not been live before. So that doesn't worry me. All right, let's start closing some things here. And let's just make sure that I'm live. I should be live, which is very good. I am. I'm live on Twitter too. That's crazy talk. Welcome to another episode of Market Bus, guys. Yeah. Man, it's been such a boring day. I didn't even pay attention to markets today. I I went on a little bit of a holiday today. I'm kind of like there was nothing to look at today. We had PCE data in line with expectations, a little bit hot if you dig a little bit deeper, but I mean, the market seemed to sort of bypass it a little bit. Kind of didn't care. We are seeing some of the AI trade kind of rally here. Like we're finding a bid in some interesting names here, like GV, Vertiv here. Let me show you a chart here. Let me share with you what I'm looking at. I guess I'm going to share that one. All right. Let's share this. All right, let's share this. I don't want to share too much, you know. So I'm going to share system audio, and I'm going to share this, which should be this one. All right. I'm going to share that. I'm going to share that, and I'm going to change my layout because that's awful right there. Pretty much. I mean, like we did some moving away from healthcare, from consumer defensives, right? Like what we can see what's red today and where that money ended up going. Google is down, Amazon's down, some of the hyperscalers and some of the plays, like even Meta, like the moves on Meta today were insane. You get those for free, Dragos. Oh man. But yeah, it's just been such an interesting name. I'm quite surprised that computer hardware is up, but then SanDisk hasn't shown anything here. You know? But yeah, Salesforce, I would have to dig a little bit deeper. I mean, like there will be some time to talk about those things, but the Nvidia earnings are upon us. It's all in the Discord. Don't forget to check out the link. I don't think the link is in the description because I'm not that adept in making all of the changes that I need to make before this. But yeah. I thought some of the boys were gonna be joining me on today's stream, but I don't think that's the case. I don't think that's the case. But yeah, Meta's move today was surprising to say the least. Like I saw Meta at like 4% to 5%. By the way, did you hear the guy speak just now? I just want to make sure you guys are hearing him right. Okay, Chinese manufacturer. Ooh, jeez. I think he's gonna be watching, so he will be in the chat probably later on. We still have quite a bit of time. We still have 30 minutes before the earnings. I am paying it very close attention. I should have. Actually, I need to make a buy. I need to buy some call options here. Actually, Charles. I have 10 minutes to make all of these purchases. I mean, like, do I want to do this? Do I want to take this risk? I Hopefully there is a move on the Max 7 here. That would be fantastic. Yeah, I've seen some crazy things. I mean, we are seeing sort of even well, software is kind of taking a dump here. It's all over the place. Even Uber is down. So market imbalance. People are buying the S&P 500. Interesting that we're buying the S&P 500. I think today's day night for Graham. Maybe. So I don't think he'll be here. I'm actually like I don't know if they'll pay, right? Like they are expecting a 5% move, hence why I'm buying like on the leverage ETF, the move is not as big. So if we do get the 5% move, I do make like 100% return in that trade. But I'm actually not buying for me this time around. Let me All right, so let me go here for a second. Let me just make say, oh, Graham is here. Let's go. I mean, this is an important day for our portfolios. You know, we get to decide whether we make some money or not. But so far, I mean, market has been so boring today. So boring today. But there has been AI momentum. Like you can see, there's definitely AI momentum happening, right? Like Vertiv is up, GV's up. So they're telling you that we are expecting that beat from Nvidia. But then the big question, it's coming. It's coming when the earnings come. There were some things happening today. So yeah, we got GDP. Everything was in line today. Even oh well, durable goods was a beat here. Whoa, I didn't see that. Wasn't loading properly for me today. Yeah, US PCE price index was a little bit harder than expected, and then core PCE was a little bit harder than expected. It was in line, but yeah, yeah, Graham is in the chat. I wonder if he has me on. Yeah, he has me in the chat. I wonder if you guys are both in the same chat. Because I'm Scotch. I'm on Scotch and Stocks too. I'm live in a couple of places. But yeah. Yeah, he is.
We do a little trolling. It's called We Do a Little Trolling. I'm an extremely stable genius. Okay.
Everything that I've had, praise the Lord. Worship Christ with the best of devotion.
Like, I don't mind being alone because I can mess around more. I want to put more sound effects too. These are fun. Really? I wonder why. But yeah, because you're watching in Scotch and Stocks. Go to Market Buzz. Go to Market Buzz. Is it really loud? Dang. This is interesting. Wheat is American to the American harvest. I mean, the thesis makes sense, right? The question will be what other things what other things affects that market in particular? And that's difficult to say. Like I wish I could be like I could give you a better answer, but the reality is I have no idea. I mean, like I just don't know the weed market. I don't trade that, right? So let's have a look. I mean, you've seen it move already. I wonder if that move is because oh, that's weird. Like corn is whoa. That sucks. I have to look at the commodities ETF. Commodities ETF that I've been paying attention to. This is scary because that tells me inflation might continue to go up if we've seen this sort of like rapid move. July we saw lower prices, kind of like dragging down, but then now we're seeing everything come back up. That's not good. Okay, I'm looking at the wrong things. I'm not American. I mean, like I am American in the sense of like I'm from the of the Americas, you know, but I'm not American as the USA of America. Market is coming down a little bit at the close. All right, there we go. But cool. Yeah. No. Q1 was because I guess just expectations are too lofty and everybody was in. Now, this time around, like I know Nvidia Super Bowls that sold some of their Nvidia position in order to buy other stuff, which tells me that there might be an opportunity to rally here. So, something to pay attention to. I'm not saying it will happen. I'm just saying that it could happen. And if it does happen, that'd be nice. I am ready indeed, senor. I am ready indeed. No, no, no. All right, so we still have a little bit of time. We have about four. Fuck, I need to buy these options. Man, that's the problem with ADHD. I just forget about the things I need to do, and I need to do this. You're gonna give me a better price. Yeah, they are giving me a better price. I'm gonna buy some more. All right, let me make some buys before the market close. We still have a little bit of time, so I can run to the preview, the preview on the earnings. It's hard. I know the feeling. I'm gonna buy it. I'm gonna buy it that, and then I'm gonna buy. All right, so I have 1, 2, 3, 4, 5. I bought 5 contracts, and that was 1,000. So if I double my position on those, yeah, I can do that. I can buy 5 more. Yup, and then that gets me there. How to do that? This would suck if I don't get paid tomorrow. The thing is like I probably won't, but I'm willing to take a gamble here. All right. Place the order. Let's go. That gets me a buy cheap. All right, so I've made the purchase already. So I'm kind of glad I waited until the last day. I didn't want to buy it fully because I had a feeling market was gonna come down a little. Fuck, it continues to go down. Um, by the way, don't buy stuff you don't understand. You know, I think that's a given. But yeah, Nvidia continues to go down. Whoa, that sucks. But yeah, ID. In terms of the wheat trade, I would say, man, like putting a little bit of money and just like seeing how you sort of like react towards the move and kind of understanding it, putting money on the table definitely allows you to pay more attention to the stock. So I would say like it's not out of the question, you know. And if you do think like test out your thesis, try to get a little bit more information, and if you have the conviction, execute on the trade, right? Like don't wait for confirmation from other people. Like try it out, and worst case scenario, go with 1 or 2% just to test out the waters of your portfolio, or like even less if you want, just to test it out and see how it performs. And the problem with futures is you end up sort of, well, if you're going in the ETF, you might actually benefit. So yeah, don't be scared of it. Just execute. Is what I would say. That's my take on it for sure. Oh, but again, no financial advice. Do whatever you want. It's your money, not mine. Understand that. Like my risk tolerance is very different than yours. Like I'm losing on my crap. I'm glad I bought there. That sucks. All right, so the market is closed, ladies and gents. Where's my bell? I've moved so much stuff around. It's kind of crazy. All right. All right. So let's pay attention to the. There we go. Okay. So Nvidia earnings. This is the preview. This is what we're waiting for. Earnings per share, revenue, cloud revenue, or whatever edge, like hyperscaler computer, whatever they're gonna call it now in their earnings. They're all gonna beat. This is a beat. It's a guaranteed beat. Nvidia doesn't miss, and if they miss, like get ready to run quickly. Like and like don't sell today, sell tomorrow morning because the traders are gonna try to like the shorts. The shorts are gonna try to get out really quickly, and then that's gonna give you an opportunity to sell if they miss. Now that's not my base case scenario. Like, yeah, like the worst part is hello, good sir. You in this? Oh, margins taking off. Huh. They're not moving that much. That's a massive beat. Revenue is not much, but that's crazy. Yeah, they're up 6%. Yo, can you guys hear the guy talk about the earnings? Can somebody say yes? He's talking now. You can't test this. I hate the fact that I can't test it. God dang. It's interesting because software is actually finding a bit and it's starting to like if this continues to go this way, I mean like it's still so cheap, but again, not financial advice. I'm not in it this time around. I'm not in it. I think I sold it and I never got back in. All right, so let's go back here. Let's go to aftermarket performance. Software is up today. I wonder why. That Ooh, so sales is actually guidance is up on them. This will be an interesting thing to talk about. I'm sure we'll talk about it with Timothy tomorrow's episode. That's for sure. Well, we still have 5 more minutes. Okay, so earnings per share, I'm expecting them at $2.11. Revenue, $95 billion. They expected is like around 92, I think. It's about 92 and a bit. Yeah, but look at what Financial Juice says. It's 92.3. Um, it's all over the place too, right? Like revenue estimates, I think their estimates for revenues are coming in at 91 billion is what they said, and they usually beat on top of that. And their guidance could be like 92.8, and then like an 89 would be so ugly. Like the market would just hate it. But I'm actually thinking that we could touch those 95s. Like I don't see it out of the question with new revenue coming into the picture. I wonder if it comes at the second half of their fiscal year, so Q3, Q4, or does it come at the second half of this year? I'm actually not sure. I need to double check that data, but we should see it. because it's a massive revenue jump. Let's have a look. So if we go to financials, right, revenue is expected to grow by 17%. Ninety three point eight. I think 95, and they blew it out of the water last time too. So, oh man, Toby's got. You've been calling the market pretty good. I think you went a little bit nuts with the with the PCE predictions on today, but that's okay. I like to dream big too. But the fact that the rest of the AI trade, what do you mean it's not looking good so far? It's looking great. Look, we're 0.1% up. Insanity. Even CrowdStrike's up. Whoa. Whoa. CrowdStrike's crap. Usually when software but it happens. Like I mean, like, yeah. If we had gotten those numbers, that would have been pretty bad. Like if we would have if the prices didn't sort of move all over the place. That would have been nice. The problem is you still have gasoline and all distillates sort of still a different pricing, so it's hard to sort of make a prediction here. So yeah, so Nvidia earnings preview. Earnings per share, we're expecting a beat. Revenue, we're expecting a beat. That's the easy part. The hard part is figuring out whether gross margins are being maintained with a 15% increase and how much are they how much of that is an increase in pricing and how much of that is an increase in margins, right? Because then that would sort of give you the idea on demand. And if revenue is not being affected by the increasing prices, that tells you that demand continues to be strong into the next quarters. So that's what I'm going to be paying attention to as well. As sure, like data center revenues will be good to kind of pay attention to. If we go to Nvidia earnings relations, we're going to figure this out. Relations. We're gonna figure this out because they changed the way that they are gonna do the press release, as I'm understanding. This was first quarter of last year, right? And then they're going into like they're doing this weird thing where they are, yeah. So they're gonna do data center revenue and then edge computing stuff, right? Because I think their consumer computing revenue. The one. Mhm. What did he say? What did he say? Like it's interesting because the Nvidia earnings are still. It's not down. I mean, it's down on the day. You know what I mean? It's down on the day. Okay, there's yeah. It's time. It's time. I'm ready. I'm real ready. Yeah, boy. Dude, I'm surprised. Everybody's so like so close paying like it's so like everybody's paying so much attention to Nvidia that it definitely allowed for an opportunity there. I didn't have any calls. CrowdStrike up 9%. Palo Alto almost 5%. Software is finding now. Ooh, look at Workday. I have Workday. I moved my position from CRM to Workday. Not on eToro though. Crap. I'm not in the like. I'm in Adobe. Is Adobe up a little bit? Yeah, let's go to the moon. See, like you end up making like sort of like money by proxy, which is not too bad. It's not crazy. It's like now the narrative is software is still working. You should invest more money. It's now cheap, and now you're just gonna see them rally together. What the question is the big reveal is when they're both out in such a way, like they're both up in such a way that it's like they're both making a profit here, and they're both benefiting from AI. That would be the good narrative to follow. But again, like Vertiv continues to be up. I mean, 3.5% up. I mean, it's a good day. I'm also up on Adobe. I'm up on Adobe quite a bit. I'm up on Adobe about 17%. I can't complain with that. Like that was the thing. It's like I you know what it was, Toby? I freaking had like the red instinct, right? Like move some of the capital out of semis into software because it was so beat up, but I just didn't do it strong enough. And then I went back into semis thinking that why are they getting sold off so aggressively? And they were so like obviously like there was a $120 billion sort of selling against me. That would have been the time to sort of like rebalance back again, but yeah, it's gonna take some time for the semis. I mean, like I think hopefully this is the time that it does, but I bought some SanDisk today, and I'm hoping that it bounces. I'm going to take an L on those though. To the moon. To the moon. Hello, hello, hello. Well, you must be everybody. Like, well, what's crypto doing today? How is Bitcoin doing today? It's a little bit down. It's not hopeful. We're June pricing. That's kind of nice. It's kind of nice. We are seeing well, my portfolio is picking up and I'm almost at not losing any money. It's a little bit. There's just a route. Like everybody's just like there are so many different narratives that are affecting this market until Micron comes and says, "Hey, like we're doing really good. Our prices continue to increase." That is the case. But yeah, I'm going to be paying attention very closely to gross margins. Hopefully that continues to accelerate. I'm hoping 76%. We'll have to see. I mean, like the margins from the memory players was so high. Nice. Nice. I mean, like nice. I hope. I hope it's nice. Yeah, not guaranteed. That was the thing. Like the moves on Sandix have been so like violent. It's surprising to say the least, but yeah. I just wanna see this pump. And then we can go here. 17 billion settlement on all those states. I think the original was like 3 trillion or something like that. It was like the value of the company that they were expecting to get from Meta, and then they ended up getting 17 billion. Which is still a lot of money, but I mean, plus like I think it's like 17 billion plus 10 billion in lawyer fees. Dude, you've no idea. I'm so like I know, dude. The Fluence trade has me a little bit upset because it should rally, but then the CEO said something I really didn't like, and I was giving them until the end of the year. But now they're extending that until next year. And then they're also saying that they're not seeing the increase in margins that other companies are seeing. And man, I don't know, man. Like I'm like, I don't know if I should get rid of that position. I'm still trying to figure that out. Because it's still a good company and it's still fairly priced at current levels, but then again, like it might just take them longer to produce. So it's tricky. It's a tricky position. Like, and I have to, I grew it too much. Crap. I mean, I didn't sell it, but what else are you gonna get? What, right? Like it's also, you know, it's tricky. It's a tricky situation. It's hard to say. It's hard to say what's fair and what's not fair there, right? Because then what does that precedent create, right? Like it's everything that's like bad, the responsibility of the company that produces it, right? Like this is gonna be interesting to see how it plays out. But I have to read more. Like I'll talk about it tomorrow for sure, but not today. Today I had to take a day off. I'm like, look, if I'm wrong, I'm wrong. But I was like, I've made my position. I've done my analysis in the last couple of weeks. You know, it is what it is. It is what it is. Yeah. I think they started selling since May, the Vera CPU. We're about 2 minutes away. Boys, get ready. It is Jensen time. Insane. Insane. I'm green. I'm up $100 today. Sell it all. Sell the whole portfolio. Get rid of everything. Take it slow. But yeah, I mean, it's not like in theory, the best strategy is to just lump sum into the market, even if it's the S&P 500. I like to consider my S&P 500 position as a cash position, and then I move in and out of the S&P 500 position on stocks that I really like. Sometimes it works, sometimes it doesn't. Sometimes maybe good, sometimes maybe shit.
Everything that I bear, praise the Lord. Worship Christ with the best of devotion.
Do not come. Do not come.
I'm going to come.
Let's go, boys.
Oh,
It is. It's gotta move prior to. It's gotta move. It's gotta move, right? Like it's. But then again, the algos will decide what to sell here. I know. I know. My bad. My bad. I messed up. That's on me. It's on me. It's on me. 10 seconds, boys. Dude, it's always better than what I'm expecting. Dude, it's such a massive beat. Like it always does so well. Yeah, sorry. What do you mean you can't hear? Man, I've been asking you guys if you can hear. We should. Well, we should. That's what's fantastic earnings. Nvidia's Q2 earnings comes in at 96 billion. I was expecting 95 billion. Dude, it beats my expectations every time. It beats my expectations every time, and it does the same every goddamn time. All right, let me show. This sucks. This sucks so much. Oh god damn it, dude. Dude. It sucks so much. It's so down. Do you think it's the inflection? I want to buy some more. It always beats my estimates. $2.22. The expected was $2. It's okay. I'll recover. It's fine. That sucks so bad. Let's have a look. There we go. That's why. Yeah, that's why. That's why. That sucks. That sucks. What did they say? Revenue's gonna drop down to 73%. That's the problem right there. Probably not, right? Like if they were able to sort of showcase that margins were gonna prevail here, it'll probably bounce. We'll have to wait for the call, but like it'll bounce from here. It is still the same price as last earnings, and this was a blowout quarter. But then the question of margins comes center stage because they are having a 15% increase in pricing. That being said, why are we not seeing that, right? We're seeing Q3 revenue go to almost 110 in the range. It's probably going to be like what, 110, like 110 plus. Um, right, from 96. It'll bounce. This is a buy here. It's a buy. I don't know. I'm also baffled by the fact that the rest of the market, yeah, this is what we should be seeing. The rest of the market kind of going up. It's back up. It'll probably bounce up. I'm surprised we did see that much selling, in all honesty. It's massive selling. There was massive selling. You know what? In all honesty, I wouldn't be surprised if the AI took this as a bad thing. Yeah, sorry for almost waking up your daughter. I didn't mean to. I'm still getting used to the audio. That's why I have the headset. I mean, like this is so good, right? Like it's just yeah, like the problem the main issue is this. It's the decline in gross revenues. But it should bounce. We're probably going higher from here. When Jensen speaks, we're probably going to get an idea. That's why what? It's this, Dragos, right? So you're asking me here, right? This is something I was paying attention to. And I think that is extremely important is it's adjusted margins, like the gross margins here, right? Gross margins for Nvidia right now are sitting around 75% quarter on quarter, but then they're expecting those margins to come down a little bit, right? It's only a 1% drop, but then that tells you that the pricing power, it's sort of finicky. So that creates a bit of a problem. Um, so you gotta sort of keep an eye out on that. That this is really bullish for the rest of the market, though. This is really good for Micron. This is really good for SanDisk and every single other player in the AI sector, which is what we should be seeing right now, right? You see SanDisk a little bit higher, you see Micron a little bit higher in the aftermarket, right? But yeah, like it's the like Nvidia is in this weird position where it's like it has this amazing product that everybody wants, but also like it directly like the price of the Nvidia chip directly affects like the gross margins or the margin rates of the producers, right? So that's the thing. Like I don't like that, but it's not crazy, right? Like it's only a 1%. You can figure that out pretty quickly. But obviously you're paying more for memory, you're paying more for all of the components, you're gonna be paying more for just like the raw materials of the cards because everything is going up in price. Right? Now the question is will this company start getting affected because of that, right? Like will Micron get affected because of raw materials going up, et cetera, et cetera, et cetera? And then the question is do we just go into software? Hence why software is massively up today too. That sucks. Like it was such a good quarter. It's such a good quarter, but that sucks. Insane. Just insane. Oh man. So they're gonna guarantee 105 billion. Interesting. I wonder how does the market take those guarantees? Because it's not capex, but it sort of is. You just invest in your own product, and you get to decide the pricing power of that. No, sorry for the coughing. I'm sick, by the way. So yeah, there's that. It's an interesting move because it should balance around 206, 207, but it should bounce tomorrow. Like the fact that it didn't even go up at all. Like, it didn't at all. Like this was pre-market and then it just sold off right away. Yeah, like that's what I was thinking. It was like, what if all of a sudden, like if Jensen's saying AI has reached an inflection point, if the AI is taking this is like it just like the bots are taking that as hey, it's over. We're Riven now in full production, which is fire. We're making more money than expected. The midpoint is 108, and we were expecting 105. So it's 3 billion higher. Go estimize. Nope. I need to restart this. So I've already done Q2. It's insane, dude. Like I expected 215. It's freaking 220. too. Even some people in STMIs were even bullish, like more bullish than I was. And then you have revenues. It's just insane. This company's growing so quickly. I put 95. It was 96. Like who? Yeah, these guys are gonna do better than me. Crap, they're gonna get more points. It's done this every single quarter for the last 4 quarters. I'm not surprised at all. It sucks because I was expecting it not to do this, but it freaking did. Swear to God, it's so hot. Whoo! Oh man. Then you have like Salesforce up 15% after those earnings. Insane. It's such an interesting thing. And now we have to wait for Jensen to speak, and that's like in 30 minutes. Do you guys want to watch the call? Like, I'm going to listen to the call, but I wonder. Hmm, like, how does the market take this tomorrow? Because, yeah, if you go, check this out. Graham, so I know you can see this. But if you go here, and you can see how the company's reacting like a day prior and a day after, right? And usually, like we've been down in the past 1, 2, 3, 4, 5 quarters, right? And here's 1, 2, 3, 4, 5. I know. Me too, man. I drew it for Jensen. And it's just like he delivers, but the market just doesn't like it. And like it's a massive beat, dude. It's so crazy. It's a massive beat. But the market just does not care. Q3, like the growth is not that crazy, but then again, they're gonna beat that, right? So we're probably going to 110, like 112. Like we are not seeing it's 96. I say 95. It's still continuous crap. Like it's insane. Then margins are expected to go down here, and which sucks. Like in the call, the important information will have like will be directly related to margins. You guys want to watch this? It's not a crazy move. Today's move is around 3%, which matches sort of the matches a little bit, not a lot. Whew. I'm watching real time pricing here. You know what I sold? I sold pounds yesterday. Fair enough. Fair. Oh, I'm losing. Oh, it's ugly. It is ugly. Just how are you gonna protect those margins? That is the most important question: is how will you protect your margins as revenue continues to go up? And will is this a peak on the margins, or we should we expect continuous decline on the gross margins for the remainder of the year? All right, so investor relations. Let's look at that press release. AI. Second quarter today. Let's go. It's so good. 89 billion. Like it's such massive growth. Uh yeah, computers revenue, what I want. Like, don't say computers revenue. Do they account for China here? Wait, what? So yeah, this like computing, edge computing, like this is like RTX series, graphics cards and all that. I'm surprised it isn't growing faster. It tells you that like the consumer is not actively acting on this. It does, right? But then the question is like the market is scared of like what the expectation is later on, right? So it's like, yeah, like they're making a lot of money now, but we understand the cyclicality of this business, right? And like, yeah, they're spending a lot of money, but what happens if all of a sudden we make whoa, where is he getting this information? Ooh, probably in the voice news disconnected. It holds firm, but then the market is scared of when will this drop, and then hence why the forward PE is getting punished here. But it's not as punished as the like Micron or like it's funny because like the market is just saying Micron after 6 years is not going to be worth anything. Like they're going to go back into negative growth again. It's like whoa, what? They do. Nobody takes that away from them, but again, the fears are there and they're understandable. I mean, like there's just so much money being made on Nvidia. Let's have a look. It's coming back a little bit. It'll be interesting, but yeah, this is going to be a question for Jensen. And if he answers it correctly, which is like I hope he just doesn't go like, "Hey, you just make a ton of money if you spend a ton of money." Obviously, man, like I'm spending tons of money. But it's like how am I making a profit here, right? Like what is your narrative there? What are you seeing in that aspect? How will the hyperscalers continue to monetize this and how would we continue to see the money roll in, right? Just as good that we're spending tons of money, but would this pay? Big question. Yeah, 44% of revenue comes from three customers. Insane. Mhm. Like capex for the hyperscalers, but not for Nvidia. I think like Nvidia doesn't spend so much of money on that. Did they mention any buybacks or anything at all? Buyback? No. Where's the cookie me out, man? Hmm. Yeah, I'm still a little bit up, but like the whole sector is taking a beating here. Like you guys, man. Like how much of your portfolio, Graham, is SOXL? Don't tell me numbers, just tell me. like percentage of the portfolio. I think you guys went too crazy on it. Yes, it's holding. I mean, it's down 1%, but that sucks because we're gonna be down on my call options tomorrow. Maybe tomorrow's up. Thing is just like, do you want to trim now? You know what I mean? But then again, it might just take like a year for it to come back. Whoop, 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 whoop. There's a bounce there. I like that. Up 1%. Let's go. You know what I have? I don't want to share it. You see Dragos? That's okay. Like, I'm not upset with that at all. That's too much, Graham. That's too much. Because that multiplies to 33% of your portfolio overall value. And that's not okay. That's not okay. 4%, like it still hurts. But it's up, it's at what, 12% position right now? That's fine. I'm okay with that. It's more responsible. Graham, be more like Dragos. More responsible. Oh man, all right, let's listen to this call. Let's listen to this call. And then tomorrow I'll do a little video in the morning. Summary video on Nvidia earnings. Sometimes the dip keeps dipping. Sometimes the dip keeps dipping. It's crazy. Because like well, I don't want to talk about it. We're getting a bounce here. I'm green. I'm green. I'm making $91. Let's go. To the man. Never doubted this. Just double my profit today. Let's go. I never doubt it. I never doubted Jensen. Can't believe you guys are doubting Jensen. It might be the jacket. It might be the jacket that might be unlucky. Market's preparing for the bounce here. Let's go to the moon. I don't think eToro has this, so I could tell you what it is. I bought this. And I've been trying to profit from this for a while. And I haven't been able to do it. Yeah, it needs to be higher though. It needs to be higher. Dude, it was such a great quarter. Like it's always such a great quarter. Yeah, I bought this. I'm not. I'm not doing it. I'm not doing it. It's still hot. It's still hot today. In all honesty, I need this. I need this to break 16 by the end of the week. That would be nice. And based on those earnings, it will. I mean, if it breaks this and it goes back to 210, it's a reversal. It ate the whole candle, the whole downturn. We'll see how it goes, but as trading goes, you know, yeah, today I took a holiday. I was like, I'm done. Today I took a holiday. I've been sick since since Saturday pretty much, and it has sucked. I'm able to get one day off. You know what I want to do? I want to play FIFA. In all honesty, right now, I want to play FIFA. while I wait for this freaking call. And then that'd be nice. That'd be nice, you know? Dude, it's such massive growth. It's insane. It's 111% year on year. EA Sports. It's in the game. Yeah, I agree. I agree. Well, what am I gonna play? Football club? Like freaking what's the other one? What's the FIFA game that they pulled out now? Because FIFA took their rights away. I like, you know what I like? I like the fact that it's not that long and it's not like a full commitment of like 45 minutes. So I don't mind that. Maybe a game here and there is not too bad. This is gonna be fun. Play FIFA while watching the Nvidia earnings. That sucks. Yeah, let's see. Here. I need to find everything. Price Empire. I'm taking a beating on them. They're messing up the game. Like they're barely doing anything. Here you go. Share it here. We have a little bit of time. Enter the about. Don't play. All right, so I have the event on. Yeah. It's free money, man. Market cap. Yeah, here, check this out. So look at the market. Market's way down. It's a $10 billion market cap, and now it's sitting around 7 billion. So it's down like 30% from the highs. It's actually breaking the lows, which that means that we had a blow off bottom, and we're probably gonna go a little bit lower. Reversion to the mean, so we're probably dropping another 10%. If we want to analyze this like the market, it's hilarious. Some of the skins that I am the proud owner of, the butterfly vanilla knife. The butterfly vanilla knife. Beautiful investment when it was paying. Now it sucks. That I bought this like here. Like for like no more. When did I buy this butterfly? Why is it so little? Why are you showing me what? I bought this for like 1,400. So yeah, like I bought it around here. Like somewhere around here. Like before. It's like somewhere around here. Like in the start of this chart. I don't even know why it's not going fully. But yeah, that sucks. And then it rallied all the way to like 2-3K. And I didn't sell it. I was like, no, like I'll continue to hold and it makes sense. And this was a CSGO update. Bam. Jensen is in 7 minutes. So not in a long, like in a little bit. And then it plummeted. And this is like look, like this is a dumping chart wherever you've seen one. So now we're gonna, it's funny because it's like the stocks act like this. It's the exact same chart. Right? Like, look at this. Like, what has gone down today? Let's have a look. Like, I'll show you the same chart. Post market. What has gone down massively today? Right? So HP to go dump today. Look at this. Right? So if we go to the minute chart, it goes bam, and then it tries to go up, and then it consolidates somewhere a little bit higher than the low. So the real price is probably going to be like 27. Right? So it's like, but look at this. It's the same thing. It drops, it tries to go up, and then it tries to consolidate a little bit higher. And that's where it goes. Like, I'm not selling it now, I'm holding it. But then I bought the cases and stuff. So that's also like this is the case where it comes from. And then this is super interesting because like why don't I get like later data? Like this, I'm still making a little bit of money. Like I bought most of mine like around $5. They're sitting at around $8, and I have hundreds of these, so that's not too bad. 5 minutes away from the broadcast. Let's pay attention. Remember, gross margins is what we want to hear. We want to hear about gross margins. We want to hear about what's the plan for gross margins. We want to hear about guidance and what the expectations of the guidance is, how the Verruven and the CPUs are rolling out, and what happens with China. Because like he said something about China that I didn't fully understand. Um, one direct customer represented 16% of the total revenue. Oh, I heard that wrong. Okay. Whoa. Nvidia, we will be shipping both Blackwell and Rubin systems in the future and are currently experiencing certain supply constraints. That's not nice. We like supply constraints though, because that means that you just get pricing power. All right. Damn. So there was China revenue of 8 billion. What is that from? It's 100% it is. And I mean, and here they just said, have to dig a little bit deeper on those on their 10Q. But they're 100% selling to China. 100%. SMCI was selling freaking Nvidia chips to China. $2 billion for it. You know what I mean? I like this. I'm a little bit green today. I mean, like, I'm not as comfortable as I've been other times, which should be good, you know? Like, I don't think we're going to go up that much, but then that means that we're probably going to go up a lot. Last time I said it was like, oh, this should mean that Nvidia could rally every single time I say that. So probably Nvidia won't rally here. I'm just gonna say that so it goes. You know, I swear I have been right. It's dangerous. It's dangerous indeed. All right, let's write this down. Boom! We're in the positive, boys. All right, I'm gonna try to fix this. Give me a second.
Thank you very much. That's really nice. Thank you.
Never doubt it. I never doubt yes. It is good though. It is good. It is good because supply constraints. It's both bad and it's good and bad because it's like it's bad because you could be selling more, but it's also good because you get to price it at whatever you want because whoever wants to buy them right now, it's gonna pay the most for them. So yeah, let me have a look. No, I don't think I do.
I'm really rich.
I don't. Yeah, what happened here? Yeah, it should be live. Can you hear it? Can you hear it?
$49 billion grew 13% sequentially, driven by sustained strength in Blackwell, reinforcing that more compute drives more revenue. As new GPU capacity comes online, our hyperscale customers delivered strong financial results in the quarter with accelerating revenue growth and expanding margins. With cloud industry backlog now greater than $2 trillion, CapEx by the top 5 hyperscalers is expected to reach nearly $800 billion in 2026 and $1.3 trillion in 2027. Today, we are delighted to announce an expansion of our partnership with AWS. Building on its already vast installed base of Nvidia compute, AWS is deploying an additional 2 million GPUs starting this quarter through the second quarter of fiscal 29, along with Vera CPUs, some integrated with Rubin, others standalone. AWS will serve NVIDIA Nematron family of open models on Amazon Bedrock and SageMaker. Amazon will also adopt our full physical AI stack, Omniverse, Cosmos, Isaac, and Jetson, to power its fleet of warehouse robots. ACI&E revenue of $40 billion increased 25% sequentially and 138% year over year. Growth was driven by NeoCloud capacity additions to meet the rising demand from enterprises, AI startups, and sovereigns, as well as hyperscalers purchasing capacity to supplement their own buildouts. Using NVIDIA DSX reference designs, our NeoCloud partners are bringing capacity online faster and at lower token cost. They are
Dude,
expected to exit
the
the year
CFO of
with 8
Nvidia
gigawatts in
used to
total
be
installed
the
capacity,
like a top financial
up from
person in
approximately
Cisco.
3 gigawatts at the end of 2025. Incredibly, we are seeing demand acceleration even at our scale. Customers' forecasts point to our growth doubling next year. However, as I mentioned earlier, we expect to grow approximately 70% as we are supply constrained. Nvidia Compute is fully utilized across every cloud we serve. The economic value it generates for our hyperscale, neocloud, and AI lab partners keeps rising. Besides building the best AI computing technologies and the most capable supply chain, Nvidia has 3 unique capabilities that are engines powering our growth. First, Nvidia's architecture runs every model, and we're growing share as closed and open model adoption grow. Closed and open models alike, adoption is skyrocketing. Nvidia runs the leading closed models, OpenAI, Anthropic, Grok, Meta, Gemini, and the leading open models, TML, Mistral, Quinn, Kimi, GLM, DeepSeek, Minimax, and Nematron. We're great at small models and giant ones, large or video, auto, regressive, or diffusion, in the cloud or in the edge. NVIDIA is great at training, great at inference, great at agentic workloads. One platform, fungible for every model and workload, durable for the entire lifecycle of AI. That combination of performance, fungibility, and durability is what makes NVIDIA the productive and financeable compute infrastructure. Our second unique capability is our full stack AI factory platform that is expanding our share of the data center TAM. Since Hopper, our revenue opportunity has grown from roughly 18 billion per gigawatt to 25 billion with Blackwell, to 40 billion with Vera Rubin, which now spans Vera CPU, Rubin GPU, NVLink, InfiniBand or Ethernet, and Grok LPU announced earlier this week. Our ability to extreme code design across GPU, CPU, NVLink scale-up networking, scale-out networking, systems, algorithms, and software enables us to deliver X-factor performance gain every generation. Vera Rubin exemplifies this, delivering 30x higher throughput per megawatt and 35x lower token cost relative to Grace Blackwell Ultra. We commenced production shipments of Vera Rubin earlier this month. Having already received purchase orders from every major hyperscaler, AI cloud, and system OEM, we expect Vera Rubin to mark the fastest product ramp
Market
in
data
NVIDIA's
connection
history.
lost.
Our networking business had another record quarter with revenue growing
Market data connection re-established.
18% on a sequential basis. Spectrum X Ethernet, which grew 2.6x on a year-over-year basis, is already helping us become the largest and fastest growing network company in the world. Rising adoption of agentic AI is driving an acceleration in demand for data center CPUs. Our Grace CPU, introduced in 2021, has been a great success, with revenue on a trailing 12-month basis exceeding $5 billion. Today, we are in full production of our next generation Vera CPU. As a standalone product, Vera expands our TAM even further. Vera completes agentic tasks 1.8x faster on the spec benchmark and provides 5 times the bandwidth per watt than any other data center CPU. We expect Vera to be deployed by every major hyperscaler, neocloud, AI lab, and system OEM, with shipments already underway to our lead partners, including OCI, SpaceX AI, and starting this quarter, AWS. We continue to see demand for approximately 20 billion in total server CPUs, And based on our customer demand and improving supply outlook, our preliminary expectation is for CPU revenue to more than double in fiscal 28, positioning us as one of the world's leading server CPU suppliers. Since
How much
the
does AMD
announcement
have in
of our
revenue?
Grok partnership last year, we've been working to unite NVIDIA's high throughput and Grok's high interactivity architectures. At Hot Chips earlier this week, we announced that Grok 3 LPX, our first rack scale
they're gonna be
LPU
behind.
system, is in full production and already setting records, demonstrating nearly 4x the number of tokens per second against the next best alternative on our artificial analysis benchmark. We expect to ship Grok 3 LPX in volume later this quarter to early adopters. Nebius will be the first. Today, we're not just selling the best chips, we're selling a full stack AI factory platform, offering superior economics for customers and capturing a bigger share of the data center TAM. Our third unique capability is the combination of our full stack AI factory and rich CUDA ecosystem, allowing us to extend AI into markets a single chip alone can never reach. Beyond the hyperscalers lies a massive market anxious to adopt AI, customers with no interest in designing their own custom silicon. NVIDIA's fully proven full stack platform is
Get to take
uniquely suited
profits.
to help sovereigns, neoclouds, and enterprises build their AI infrastructure, bring it to full operation, continuously optimize it through CUDA software, and connect it to offtake demand from our vast developer ecosystem. Hyperscalers will remain a major growth driver, but non-hyperscaler growth, our AIC and E segment, spanning sovereign, regional neoclouds, enterprise, edge, and air-gapped data centers, will represent roughly half of our data center business. Our AI native startup ecosystem, developed and running primarily on the NVIDIA compute platform, is scaling at a rapid pace. Global VC funding in AI, roughly 70% of which is spent on compute, exceeded $400 billion in the first half of 2026, surpassing the $265 billion raised in all of 2025. Nearly 20 companies, including Cursor, owned by SpaceX, Figma, and Together AI, now exceed $1 billion in annualized run rate revenue, up from 13 companies in Q4 of last year, with vertical enterprise software logging the fastest growth. In enterprise, on a trailing 12-month basis, on-prem revenue in the automotive vertical reached $8 billion, while financial services, manufacturing, and healthcare combined contributed $7 billion in revenue. Hudson River Trading and Jane Street are leveraging NVIDIA's powered AI factories to accelerate quantitative trading. Samsung Electronics is using NVIDIA Cullitho to achieve up to 20x greater performance in computational lithography, while Bristol Myers Squibb is investing in Vera Rubin AI Factory, a fast follow to the Roche and Lilly buildouts, as drug R&D timelines compress from years to months. In sovereign AI, our business, primarily through the regional neoclouds, grew 35% sequentially and more than tripled year over year in Q2. A country or region can allocate land and power directly to a regional cloud partner in ways it never would to a foreign hyperscaler. We don't own a cloud ourselves. We are a neutral partner to every sovereign and neocloud. And because NVIDIA compute is productive, fungible, rentable, and durable, regional cloud interest is surging around the world. We helped CoreWeave, Nebius, and Nscale build entire infrastructure businesses, and neoclouds are emerging everywhere. Firebird in Armenia, Cassava Technologies across Africa, GMI Cloud in Taiwan, Yoda and NASA in India, Firmus in Australia, YTL AI Cloud in Malaysia, pairing local land, power, and operating expertise with our platform. Last month, we announced a partnership with Noatra, Japan's national AI company, to build an Nvidia DSX AI factory that will create open models to power AI agents, digital twins, robotics, and physical AI applications. South Korea's LG and Hyundai Motor Group are partnering with Nvidia to build and scale AI. And in Europe, a record 35 new Nvidia-powered AI supercomputers were unveiled to advance industry and scientific breakthroughs. Neoclouds are seeing strong demand pipelines from many diverse off-takers. Rather than allocating their entire capacity to a single long-term offtake guarantee that lenders typically require to finance a data center independently, we have introduced a revenue sharing structure. NVIDIA provides a take-or-pay commitment on a portion of the facility's capacity, a minimum revenue guarantee that gives lenders the confidence to underwrite the project, and in exchange, we share in a portion of the NeoCloud's revenue earned above that floor. Independent capital still underwrites every deal on its own merits. We're not making loans. In this model, we get paid twice, once on the hardware sale and again through the share of rental revenue, a highly reoccurring stream layered on top of a one-time equipment purchase. Over time, this model can expand our addressable market and create reoccurring usage-linked revenue stream alongside our core platform revenue, with the potential to drive billions in revenue over the medium to long term.
All right, they're explaining that.
Together, NVIDIA's three unique capabilities: a platform that runs every model, a full-stack AI factory platform capturing more of the data center TAM, and a CUDA ecosystem that extends AI into markets no single chip could reach alone, reinforce one another, and are the engines of our growth. Let me update you on our progress with our Frontier AI Labs. The Frontier AI Labs have extraordinary demand for training and inference compute, but they are growing faster than what their balance sheets and credit profiles can support. They have rapidly growing customer demand, yet still lack the decades-long infrastructure contracts and investment-grade financing capacity needed to secure the AI factory infrastructure independently. In other words, their growth isn't limited by their technology or customer demand. It's limited by compute. For these companies, more compute means more intelligence, more users, and more revenue. NVIDIA is needed to help power this flywheel. First,
and more gross
we've
margin.
invested nearly $50 billion in the Frontier AI Labs. This was a meaningful commitment, but it represented a small fraction of our expected free cash flow over the same period. Further, to support the Frontier Labs infrastructure buildouts, we recently announced partnerships with 6 of the world's leading infrastructure capital providers: Apollo, BlackRock, Blackstone, Brookfield, Goldman Sachs, and KKR, to establish financing platforms that will raise over $500 billion of third-party capital. With these partnerships, building on our unique, fungible, and durable computing platform, the AI Labs will be able to build and assess AI infrastructure funded by long-term institutional capital at relatively attractive rates. Last week, we announced that we secured land power shell capacity through our partnership with SoftBank Energy to exclusively host NVIDIA Compute at their Portsmouth campus. The initial deployment, expected to support 4.25 gigawatts of AI factory capacity, will be utilized by OpenAI. Each generation of NVIDIA AI factory systems deployed at Portsmouth could represent approximately 1.5 million NVIDIA GPUs. And over 20 years, the site could support multiple upgrade cycles. Here's the essential economic point. The LPS commitment secures a long-lived AI factory site, while the NVIDIA compute within the data center can be upgraded repeatedly. This project deepens our long-standing partnership with OpenAI. OpenAI has committed to substantially deployments of Nvidia AI infrastructure through 2030. OpenAI's existing and planned commitments represent approximately 12 gigawatts of Nvidia compute. For another frontier AI lab, we will provide selective credit enhancement for nearly 2 gigawatts of compute. This complements the substantial Nvidia compute capacity they've secured independently without Nvidia's credit support. We recognize the scale of this support, and we know some will call this circular financing. We see it differently. We're going through a major computing platform shift, the creation of one of the most important technologies in human history, and these are once-in-a-generation companies. Their technology leadership is proven, and their customer traction and usage are skyrocketing. We expect them to become
so I don't want to get too
the
drunk.
largest technology companies in history. We believe these investments, measured against the strength of their demand, the business they create for us, the ecosystem they build on NVIDIA's platform, and the equity returns on our invested capital will be excellent. And our risk is limited. The NVIDIA compute platform is fungible and durable and can be redeployed to support other customers.
It's not enough because
for context, we expect demand from the AI labs for which we expect to leverage our balance sheet to contribute toward roughly a quarter of our business next year. This remains compute we ship will be consumed by investment grade customers or those that are backed by one. In Q2, we shipped less than 1% of our total data center revenue in Hopper 200 products to customers based in China in accordance with the US government licenses. Current Hopper shipments are dilutive to corporate gross margins. And given ongoing geopolitical uncertainty, there is no China data center compute revenue in our forward outlook. Moving to the rest of the P&L, GAAP and non-GAAP gross margins were both 75%, largely unchanged from last quarter due to a similar product mix. GAAP and non-GAAP operating expenses were up 10% and 11% sequentially, primarily due to high compute infrastructure costs and compensation and benefits costs. Our non-GAAP effective tax rate of 16% increased from a year ago, primarily due to higher revenue. On our balance sheet, inventory increased to $32 billion as we prepared for the Vera Rubin launch. Days of sales outstanding increased to 60 days, reflecting extended payment terms for large purchases by certain investment-grade customers to be shipped over multiple quarters. In Q2, we returned a record $26 billion to shareholders, $20 billion through share repurchases, and $6 billion through our quarterly dividend of 25 cents per share. Relative to our plan to return 50% or more of free cash flow, we have returned 60% on a year-to-date basis. And going forward, we intend to increase and return excess free cash flow net of strategic uses. Let me turn to the outlook for the third quarter. Total revenue is expected to be $108 billion, plus and minus 2%. We expect sequential growth to be driven primarily by ACI&E with data center, while growth in hyperscale is expected to reaccelerate in Q4 and into fiscal year 28 as supply of Vera Rubin grows over time. We see Vera Rubin accounting for about 20% of data center revenue in Q3. Looking ahead, our preliminary expectation is for fiscal year 28 revenue to grow approximately 70% year over year. Although we will work to close the supply-demand gap, we expect supply to remain a bottleneck at least through the end of fiscal year 28. Many of you have expressed concerns regarding our gross margins as component costs have risen significantly. As you are already aware, we are experiencing extreme pricing conditions in memory. The magnitude of the price increase has exceeded our prior expectations and are headed even higher into next year. As a result, we are resetting expectations today. For Q3, we expect GAAP and non-GAAP gross margins to be 74%, plus or minus 50 basis points. We expect margins to bottom in Q4 in the 71 to 72% range, before settling at 72 to 73% in fiscal year 28, as executed price increases take effect in Q1. We want to be direct about this rather than let it linger as an open question. Memory scarcity today is being driven in large part by the AI build-out itself, and unlike a component that simply raises our cost with no offset benefit, tighter memory supply is a symptom of the same demand surge that's driving our own growth. We have long-standing, deep relationships with all three major memory suppliers, and we're working closely with them to further increase the capacity our roadmap requires. GAAP and non-GAAP operating expenses are expected to be approximately $9.2 billion and $9.0 billion, respectively. For the full year, we now expect OpEx to grow in the low 50s, driven by a broadening of our product portfolio and further increase in the usage of AI tools, which is already and will continue to enhance engineering productivity. For full year, fiscal year 27, we continue to expect GAAP and non-GAAP tax rates to be between 16 and 18%, excluding any discrete items and material changes to our tax environment. With that, we will now transition to Q&A. Operator, please poll for questions.
Where's Jensen at?
At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. Your first question comes from the line of Joseph Moore with Morgan Stanley. Your line is open.
Great, thank you. I wonder if you could give us color on the 70%, and what gives you the confidence to guide a full year out? You haven't been doing that. And then what's the gap between that amount of growth and the 100% demand growth? What is the kind of key constraint that separates those numbers, and could you close those gaps over time?
Yeah, thanks, Joe. As you probably are aware, AI has become useful. And the AI agents that are being adopted everywhere use an enormous amount of compute. First of all, the large language models are larger than ever because they're smarter than ever. And these agents go through reasoning and planning, multiple turns of tool use. The amount of compute necessary for an agent versus a human using it is probably 15 to 100 times, depending on the type of problem you're trying to solve. And so the amount of compute necessary is just extraordinary. That's a factor that almost everybody sees. The part that people don't see about our growth, because we're practically singular because of the nature of how we deliver products. I mean, we're the only company in the world that creates and builds, offers an entire AI factory platform, a full stack system. And customers can still mix and match. However, most companies just don't have the skills to do that or a desire to do that. And so there's an entire part of the market that we experience grow. There's sovereign AI, the regional AIs, their neo clouds, their AI startups, their enterprises, where we're seeing, which represents about half of our business, and that's growing 100% a year. That part of the world's computing is likely to be larger over time than even what we're currently experiencing in the cloud. And so, I think the demand that we see is driven by all of those factors. It is also the case that you can no longer procure technology per se and stand up these infrastructure. You've got to go secure the land, power, and shell, which oftentimes is a couple, 2-3 years out. All of the rest of the supply chain necessary to align the construction, the power, the cooling, all of the labor that's necessary. And AI infrastructure is creating so many jobs all over the United States and all around the world it just takes a lot more planning. And so we're involved in securing infrastructure now, further down the pipeline. Just as a long time ago, people asked me, why is it that we're working with memory suppliers when we're a chip company? And today people understand it's really quite genius that we were working on our supply chain so far upstream. We work with power generator companies. We downstream. We work with land, power, and shell companies all around the world, and that helps prepare all of this computing that's going to be built that will ultimately deploy for our ecosystem and our customers. And so we just have a lot greater visibility now, upstream and downstream. It is the case that we've never forecasted or never guided to a year in advance. And even though our demand is much greater than 70%, our supply allows us to confidently deliver 70%. And we're going to continue to work with our supply chain to increase on that. But what we wanted to do is to be consistent with everybody, from our customers, our shareholders, our supply chain. Everybody sees the same view. And the reason why that's important is because, everybody's putting a lot of resources at play. And so we wanted to make sure that everybody has the same set of information. And we've got a huge year coming up next year. And it's going to be pretty extraordinary.
Your next question comes from the line of C.J. Muse with Cantor Fitzgerald. Your line is open.
Yeah, good afternoon. Thank you for taking the question. There's tremendous investor focus on your inference market share. Can you speak to the evolving workloads you're seeing with agentic AI and how you see your share evolving here over time, particularly when you reflect on the growing value of the TAM you're seeing with each new full stack generation, your expectation for greater growth from ACIE, and then also including Grok 3 LPX? We'd love to hear your thoughts.
Yeah, thanks, CJ. The AI lifecycle is getting way more complex than it used to be, and it's playing into Nvidia's architecture much more greatly than it used to be. And so you could kind of see it as 4 phases. There's the first phase, which is preparing all of the data that you need. Some of it is synthetic, some of it is real, some of it is human labor and human labeled and generated. Pre-train the models, and then there's post-training, the third phase, and then there's the agentic inference. And agentic inference is extremely complicated. And so every one of those phases are complicated. The thing that's really great about the NVIDIA architecture, and we created this with NVLink 72, and it was a big surprise on the world when we first created the world's first rack scale architecture. It was hardly easy, and it was very challenging building the first generation. We're now in our 3rd generation of NVLink 72 rack scale systems. We had to reinvent the entire supply chain, reinvent systems, reinvent the technology, redistribute our software, refactor our software. Everything, every aspect of it was hard. But what it allowed us to do was to create one fungible system that allows us to transition from data creation, data preparation, to pre-training, to post-training, to agentic inference. The benefits to customers is incredible. And the reason for that is because you've just spent, and we just mentioned, each gigawatt of technology and NVIDIA's revenue exposure in the Hopper timeframe with Hopper plus InfiniBand, and now Vera Rubin and CPU, and 3 types of different networking, because it takes that many types of networking to address the entire world's data center, not to mention the scale in security networking and the scale across multi-campus networking. So you could argue 5 different types of networking systems, and then of course Grok. And all of that increased our revenue contribution or revenue opportunity per gigawatt to $40 billion. So each gigawatt of data center increased from, say, $30 billion about 5 years ago to now $60 billion today. Of course, the productivity is tremendous. The performance is incredible in comparison, but you're talking about a $60 billion investment. And to the extent that you could you could use it across multiple phases of the AI lifecycle. Run every single type of model you can imagine running on it, whether it's diffusion or autoregressive or state space or some hybrid version of that. Every version of attention mechanism you can think of, small or large models, the investment that you make will be preserved and useful and productive for a lot longer time. And so I think our advantage in this new world is really quite extraordinary, and it could explain, why it is that our growth is actually accelerating. It was already large, but now it's accelerating. Let's see, you asked about Grok. I was super excited about Grok 3. We achieved a record token interactivity rate, extremely low latency performance generation. The team is doing fantastically. We spent the last several months fusing the NVLink architecture, which will be the core, and it'll be the core engine. And then for services that would like to have super high interactivity, super high speed token generation done, the throughput is going to be a lot lower. The cost per token will be higher, but you could associate it with high ASP services. And so for those companies, you could bolt on one of our Grok accelerators. I'm super excited about that. But the vast majority of the world's data centers will just be Vera Rubin NVLink 72.
Your next question comes from the line of Stacy Rasgon with Bernstein Research. Your line is open.
You know what I want to buy?
Hi, guys. Thanks for taking my question. So the 70% growth in fiscal 28, which I guess is sort of calendar 27, so that's something like, I don't know, a $200 billion uptick versus the prior outlook. If I back it out, the prior outlook was $1 trillion over the 3 years. So this is probably 200 billion more. I was just wondering if you could talk us through the contributors to that increase across the different products, Vera and CPUs and Grok and everything else. And also,
trillion?
You talked about your price increase that takes effect in Q1. So I assume some of this is pricing. And I guess I'm also curious, and maybe I'm squeezing too many questions in here, but I'm also curious, just it's a constrained number. What would it be if it wasn't constrained?
The unconstrained would be a lot higher. It's we grew 100% year over year this year. The unconstrained, is significant, and so we're just going to have to go work hard to get more capacity. And we have a large supply chain. We have a really gigantic supply chain, and so we have incredible partners, and we've secured a lot of supply. But we just need a lot more.
Connection lost.
To break it down, the way to think about that is most people see
Market
just
data connection
hyperscalers
reestablished,
and that's half of the picture. The other half of the picture is what we call AC, and that's all the enterprise, the neo clouds, the sovereign AIs. That part of the world is invisible to everybody, and the reason for that is because they don't buy custom chips. They don't buy chips one at a time. They really need an entire factory platform built for them. And so that's a space that we add just a tremendous amount of value. Now, of course, back in this hyperscale space, that's growing incredibly too, right? You know that they now have backlogs of $2 trillion. You know that when they stand up Nvidia Compute, when that happens, their revenues go up. Their earnings contribution go up. Compute is profitable, very profitable today, and compute directly translates into increased revenues. And so there's just a race to want to bring more Nvidia Compute online, both at the hyperscalers. But what you don't see is just really tremendous opportunities outside of the hyperscalers. But the other part of it is, and it's the reason why we mapped it out for you. In the case of Hopper, we were at about 18 billion per gigawatt. For Grace Blackwell, we're at about 25 billion per gigawatt. And for Vera Rubin, it's about 40 billion per gigawatt. And the productivity is, X factors increase in each generation. And so customers want to race to the next generation as fast as they can. Meanwhile, because NVIDIA's compute is so productive, the tokens they're generating, the GPU hours they're renting out is insanely profitable, as you know. Their margins are fantastic. And so all of that is just simultaneously happening. I think the big picture is that we're going through this platform shift, and it affects every computer company, and every industry in the world uses computers. So therefore, every industry is affected, every company is affected. And this new way of doing computing is intelligent. It's not based on retrieval of files, but it's now generating intelligence, and that requires compute. But the results you get is phenomenal. The results you get is tremendously better. And so, we're just seeing that across the world. Everybody wants to be part of the AI revolution. Everybody will have to be part of this computing shift, and everybody has to build infrastructure.
Your next question
Market
comes
data
from the
connection
line of
lost.
Vivek Arya with Bank of America Securities. Your line is open.
Market data
Thanks for taking my
connection
question,
reestablished.
and thanks for providing all the transparency and all the commitments and guarantees that you have for a number of years. When I just add up everything that's in the CFO commentary, I get to a number of about
nuts, dude.
500 billion or so, obviously over the next several years. So I had a few questions related to that. First is that the takeaway that the sum of all your ecosystem investments over the next
This
several
is the
years
real
is in that
this
ballpark, or
discussion.
are there other equity or other investments that could still be ahead? That's one. Secondly, if there is a specific cash, part of that that we should think about in fiscal 28. And then, Jensen, a lot of these investments are, designed to help the frontier labs, especially OpenAI and Anthropic. But both of them are designing their own custom chips. In fact, OpenAI just, in the last few days spoke about Jalapeno and their claims about being better than Blackwell and so forth. So how are you balancing this dynamic where you want to invest a lot of the ecosystem, but part of that ecosystem wants to develop competitive solutions? Thank you.
Well, we're
He's
building
worth
something very
billions.
different.
He has the right business, bro.
Whereas many of these XPUs are inference specific chips for one cloud or one service. NVIDIA is a platform, an entire AI factory platform that spans the entire AI lifecycle that you can use in any cloud. It's in every cloud. You can run anywhere. We'll help you set it up anywhere. And so we built something very different.
Yeah. It's a very good point.
All of the
It's
AI
like saying,
services at some point
OpenAI has
are going to
these new
want to
tires that
go
are really good.
around the
And
world.
it's like, yeah, we
And
built a whole
those
car,
data
bro.
centers won't necessarily be just built by them. And also, I fully expect, and so they're going to run, and I think they're going to run on NVIDIA all around the world. And of course, I think our technology, I have 100% confidence that our technology will continue to be extraordinary for them, and that the economics of using our technology, whether it's from data processing to training, to post-training, to agentic processing, our technology is going to be extraordinary for them. They're going to use it. And so I have every confidence that they're going to be customers and partners of ours for a very long time. Now, having said that, taking a step backwards, investing in these two companies, or there are several AI labs that we've invested in, investing in these companies are once in a generation opportunity. I think the only regret that I have is that I didn't invest more and sooner. And two of the companies will likely go public soon, and others will follow. And these will be some of the most consequential technology companies in history. And so I'm delighted to be their friend. I'm delighted to partner with them. I'm delighted that they're building an ecosystem on top of the NVIDIA architecture. I'm delighted that they're counting on us to scale up. And I have 100% confidence that, through quite a long period of time, they're going to be utilizing NVIDIA compute for a lot of their computing. And so I feel great about it.
It's okay.
So Vivek, let me add a little
I mean,
bit
he's not going to
more
mooch
regarding the
much more
commitments
unless the market
and
hears
the
something
portion
they don't like.
within those commitments, which is our supply commitments. This is essential. This is essential for the raising of Vera Rubin today, as well as all next year. You can see that those commitments, the biggest parts of them are in the first 3 years, and we will use that to build the products that we need. This would also gives us the confidence in terms of our growth and revenue, given how much we have already aligned in commitment in terms of our supply, as well as capacity that we would need.
Your next question comes from the line of Timothy Arcuri with UBS. Your line is open.
Hi, thanks a lot. Jensen, I wanted to ask about open source. There's a lot of talk about that these models could gain share for workload in the US. You're obviously well positioned with Nemotron, but on the other hand, a lot of the end demand is being driven by these big frontier model companies. So there's a lot of investors that equate open models as being negative for the growth of those companies. So how do you sort of put and take that? Do you see the rise of open models as being good for NVIDIA or ultimately negative? Thanks.
The world will need both closed models and open models. And both closed models and open models are skyrocketing in use. I would say nearly all open models run on NVIDIA. And the reason for that is because NVIDIA's footprint around the world is the highest. And our architecture is the most fungible. It's everywhere. It's in PCs and edge devices like DGX Spark, which is doing great, all the way to robots and workstations and your on-prem data centers. Open models are doing incredibly well. Closed models we know are doing incredibly well. The Frontier Labs, their sales are skyrocketing. Their margins are fantastic. They're generating profitable tokens. They're only limited by the amount of compute. That is equally true for open models. And our position in open models is very good, because the CUDA ecosystem is literally everywhere. The open models are also foundational to just about every AI startup and every enterprise company around the world.
Yeah, we'll talk about it tomorrow. I want to do a video.
And the reason for that is because you should rent intelligence, strong intelligence, smart intelligence wherever you can, which is the reason why we rent it. And I encourage my employees to use the cloud services as much as they can. But every major company and surely every country and every startup needs to build their domain specific, their proprietary AI, their proprietary alpha. And the open models reaching frontier levels has made it possible, has enabled them to all do that. One of the areas where frontier models is vital is cybersecurity. You see the number of cybersecurity companies that are enabled by frontier models so that they could have massively distributed, continuously running autonomous cybersecurity systems to defend. Those companies are emerging. There's some amazing companies. They couldn't do it without open models. And so open models is both incredibly successful and has finally reached the frontier, but it's also vital to the American economy. It's vital to the world economy. It's vital to companies to build their own proprietary AI. You can't do it without one or the other. Both are going to be extraordinarily successful. And lastly, as you know, our market footprint of all AI models, I think we're the only platform, I'm fairly certain we're the only platform that runs every frontier model. And whether it's closed or open. Most of them were built on NVIDIA, and so they run great on NVIDIA. And so
we're doing
delighted
segments now, Graham, by the way.
By any model succeeding, so long as models succeed, I'm very happy. And both closed and open models are going to succeed, and they're both simultaneously driving our sales.
All of the models succeed. All of them. As long as they can run an
Your next
Nvidia, I
question
want all
comes
of the
from the
models
line
to
of Dan
succeed.
Bryces with Melius Research.
It's
Your
so
line
good.
is open.
Yeah, hey, thanks. I wanted to ask you a question, Jensen, about demand in a different way. You talked about demand growing 100% next year, and I wanted to kind of get a sense for a couple things driving that and even beyond that. And there's two concepts here. There's recursive self-improvement, which apparently at Anthropic and OpenAI is going very well with AI that improves itself. And even OpenAI said they could hit AGI by the end of this year. And with the developments in RSI as well as AGI, what happens to industry demand? Does it inflect further? And what does it mean for Nvidia when those things take place? And how are you looking at that as a demand catalyst? Thanks.
I appreciate that. It's going to inflect further. Today, the vast majority of AI is prompted by people. I believe that this last month it has crossed. Most AI are now agentic, but in the future, every company will have a whole bunch of agents. We have 40,000 employees roughly. In the future, we'll have 400,000 agents, 4 million agents, and those agents are running continuously. They're running in the background. If you know anybody who builds edge, personal AI agents, and they run it on their like a DGX Spark, and I know a lot of people who run it on DGX stations. This incredible workstation that we've built, and you can buy it from Dell, and they're incredible. And these AI agents running on a DGX station runs 24/7 because you got stuff for it to do all the time.
Yeah,
And
that's
so
crazy.
when the
That's a
world
really
goes
good
to
point.
fully agentic systems, you're going to have agents running all the time, working with other agents running all the time, and those will be working in the background, improving your company, improving your lives. In a lot of ways, we're kind of recursive at this point. At this point, and you
Keep
could
on
argue
worrying them.
it's coarse grained, but every time you run through an agent, it reflects on how it could do a better job next time, and it updates the skill file. And so the skills document, the markdown, is updated at the end of every single one of them. And so next time you run it, it's going to get better. It's a kind of a loosely coarse grain self-improvement. And so you see that all over, always. And so in a lot of ways, and for many tasks, we could say that we've already achieved AGI. I think all of those milestones and all those, they're kind of senseless at this point. I think the most important thing that matters for the industry is that, one, AI is now doing productive and useful work. Two, AI is generating profitable tokens. And three, if we had more compute, we could generate more profitable tokens, which results in more profit for all of the services. This is the exact phase where we're at, which is the reason why everybody's leaning in.
I like that word, profit.
Your next question comes from the line of Jim Schneider with Goldman Sachs. Your line is open.
Good afternoon. Thank you for taking my question. If you think about the 100% growth you talked about in terms of the unconstrained demand growth you're expecting, the 70% you expect to fulfill in terms of supply, can you maybe talk about or rank order some of the most acute constraints, whether that be things like data center power and shell availability, DRAM, wafer foundry availability, et cetera? If you can maybe help us understand, which are the biggest among those, that would be very helpful. Thank you.
There's something funny I could say, but I'm going to just not. Last year, one of the funnest things to do is just to go figure out where I go for dinner and who I have dinner with, and their stock price doubles the next day. I think the answer is our entire supply chain is challenged, and it's everybody is really running flat out. Wow. And more capacity is coming online all the time, which is one of the advantages. What's going to happen this year? It's not going to come online in just an instance in time, but it's going to come online every day. yields are going to get improved. We're going to be doing yield improvement. We're going to work hard on working with every one of our suppliers. And so it's not even next year yet, and so we've got lots and lots of time to work hard every day. And so at this moment, we have supply for 70%. We have more supply than 70%, but about 70%. Our demand is much higher than that, and we've got to go work hard, or we're going to be disappointing customers, and we like not to disappoint our customers, and we like to work hard for them. And so I'm going to need the help of the entire supply chain to help me out here. But they all know that. What I'm telling you about our needs for next year is exactly consistent with what I've told them. Everybody's on the exact same song sheet, and I'm trying to be as transparent as we can because we're talking about big numbers.
Your final question comes from the line of Aaron Rakers with Wells Fargo. Your line is open.
Yeah, thanks for taking the question. I want to go back to the gigawatts, the 25 to 40, and maybe try and understand, I think, Jensen, you said at some recent conferences that, that's going to further scale. So, as we think about the path even beyond Vera Rubin, we think about Vera Rubin Ultra and so on and so forth. Should we really conceptualize 40 billion goes to 60 billion, 80 billion? And then, I guess, underneath of that question is how do we kind of think about your ability to scale the capacity deployment?
Right now.
Is it a linear function, or is there something that, kind of unlocks your ability to supply more demand as we look through fiscal 27?
Great question.
Or 28, sorry.
Yeah, great question. Great question. And very simple. Is our goal to put as much compute on a plot of land? Is our goal to put more compute into 1 gigawatt or less? And so obviously, we would like the speed of light answer. The perfect answer is actually infinity per gigawatt. And so if we could literally get $1 trillion of compute into 1 gigawatt and one piece of land power shell, it would be a fantastic outcome. And so the answer is directionally in that direction. We started in the world of general purpose computing during Moore's Law. We were probably, pick your favorite number, but I'm going to go with something like $5 billion, $3 billion per gigawatt of compute with general purpose computing. And then eventually with Hopper, it was 18. Now Grace Blackwell is 25. Next, Vera Rubin is 40. And after that, it's going to be higher. And that's excellent. That's fantastic for the industry. It's fantastic for customers. So long as the productivity of it continues to grow, the durability and the fungibility continues to grow, then people are happy to invest in assets that generates revenues, generates profits, and helps them recoup their returns so incredibly fast. I mean, I heard the other day that return on investment capital is now less than a year. And we're talking about $50 billion data centers. And so that tells you something about the productivity of NVIDIA's technology and the rentability of it. I want to thank all of you for joining us today.
Good job, Jensen. Good job.
There are no further questions at this time. Toshiya Hari, I turn the call back over to you.
Thank you. Before we close, please note that Jensen will be participating in a keynote fireside chat at the Goldman Sachs Communacopia and Technology Conference in San Francisco on September 10th. He'll also be giving a keynote at GTC Berlin on October 21st. Our earnings call to discuss the results of our third quarter of fiscal 2027 is scheduled for November 17th. Thank you for joining us today. Operator, please close the call.
This concludes today's conference call. You may now disconnect.
Nuts. Like, I'm not gonna lie, these were good earnings. Not only good earnings, good guidance, and they did address the elephant in the room, which had to do with gross margins. The margins will come down, but the earnings will continue to surpass this sort of like expectations coming down, right? Like gross margins are coming down by like 2% into next year, but we're growing more than 75%. So who cares? You know, obviously we're gonna see supply constraints and like additional pricing issues, but I don't think that like they can continue to escalate their pricing in this way and potentially protect their pricing power. They addressed that pretty well and they talked about profits this time around. They're talking about money, man, because it's like, let's say for example, let's just throw a number out just real quick, right? So in the calculator, we do 79 79 plus 92, but it wasn't 92, it was 96. So they just did 96 plus 108 plus 123. So that's 400 billion this year. 406 this year. That's probably a little bit higher. And that goes up 70%. So that this is like 700. So 28 goes here. Insane, dude. That is insane. God. That is insane. Times 1.7 times 1.7. That's $690 billion in 27. I'm buying Nvidia shares. Whoever doesn't want them, I'll buy them. You know what I mean? Like, oh, I'm a buyer of Nvidia shares. Holy shit. Insanity. They were like, yeah, we're probably gonna not make as much money in the gross revenue because we're gonna print so much freaking money. That's what this goal was. Holy. All right, I'm gonna give I'll make a small little video tomorrow morning where I'm like fresh out. Keep an eye out for that. I'll do that in the morning real quick, just to talk about the important points of the call. That was so nasty. That was so nasty. Dude, they keep beating my expectations too, because before it was like, okay, like they were doing okay, but they were having their issues. Dude, but like they're beating my expectations by a margin. I said 95 billion. He comes with 96 plus. Adjusted EPS, I say $2.11. My top end was $2.15. They come in at $2.22. One more billion in data center revenue in my expectations, and gross margins come in a little bit lower. A little bit lower. And sure, they're gonna come down, and that's okay because of what they threw down on the table, and that's fine. Wow, I'm so happy. Graham, Dragos, thanks so much for watching. Antonio, Adi, you guys are MVPs. I appreciate you very much for staying with me throughout all of this. Today's a good day to be an Nvidia investor, to say the least. Damn, those were good earnings. But then again, take a little bit of profit on the table because this thing ain't going up in a straight line. That's for sure. Like we're still lower. Like that's so insane. We're still lower than the highs of the last earnings. If we continue to see here is like we are still lower. I mean, the whole sector should be benefiting from this. Let's have a look at how it goes. Bam. Everything's up. I mean, like that's massive news for Micron, massive news for SanDisk, massive news for anything that's AI right now. Just massive. Damn. See you guys tomorrow in the live stream. We do the live stream every Thursday. Don't forget to hit that like and subscribe. We're even live on Twitter. What did people say on Twitter? Were there any questions on Twitter? I don't even know. Damn, dude. Just mic drop. Like he didn't even say anything. He was just like, you know what? Like, I'm just gonna give you the information. Here it is. Like, do it with that whatever you want. Like, we're doing great. Damn, dude. Good night, my friends. Thank you so much for watching the video. I appreciate you guys. Damn, that was so good. But again, it could sell off tomorrow, right? Like, I'm just glad it's holding the 4%. You know, like I'm just glad it's green after hours and is holding. Even software is up with this, right? Like it's like we're seeing CRM is up, ServiceNow is up, CrowdStrike's up, Palo Alto's up, right? It's like, damn, like this is beautiful. This is the old AI narrative. It's like, oh, software is going to implement this, and it's actually going to pay off. Bam. All right. Thanks so much for watching, everybody. I appreciate you. Don't forget to take profits. I hate it when that happens. I forget this camera sometimes. I hate it. I hate. Why do you keep doing this to me? Why? Why do you keep doing this to me? But today's a good day to be an investor. Let's go. I love it. All right. Thanks so much for watching. I'm having fun. Peace, everybody. Woo! What an episode. That's awesome.